Hey guys, this is Chris Dewey with May River Medicare, and I got a special surprise for you. We're not talking about Medicare today. We're talking about the next most popular subject that you guys are always bringing up, which is, Chris, if I go into skilled care, I'm in the hospital for 3 days, and then I have a stroke, and I go into skilled care. What happens if I never get out of skilled care and I go into that other place? Well, the gentleman with me right now is not only an old friend, he was flown down here this week. Well, I mean, Dan, you're a year and a half younger than me. You look a hell of a lot better. But this guy's in his 50s, all right? He's practically on Medicare, so he doesn't like to admit that. But anyway, Dan, tell us a little bit about yourself.
Thank you, Chris. Thanks, folks, for listening. Really appreciate you spending time with us today. I am a certified financial planner. I have been since 1997, and I'm here to maybe discuss a couple different ways to look at protecting your assets and transferring them in the event of a long-term care situation. So I think we're going to be focused on that.
And Dan and I have been in the insurance business for way too long, but I can tell you this. I can remember when I was working as a career employee for Humana. I can remember when I was selling John Hancock long-term care policies to folks with the inflation rider back in the 90s and the 2000s. And this is one guy who said, I hope the actuaries don't get it wrong. I hope, Chris, that he didn't really say I was wrong, but he's like, you're out of your mind, man. This is probably not the right thing to do.
We're talking about something else.
Yeah, exactly. But then, tell me what happened with these policies.
Well, in all seriousness, what these insurers did is they didn't understand the risk that they were taking. They didn't understand the average time in a nursing home may be 2 or 3 years, but someone could be in there as long as 10 years.
My grandmother was there 10 years.
Yeah.
10 years.
So
she was a vegetable for 8 of those 10 years.
It's
awful.
It's an awful situation.
Well, the financial strain.
And the other thing, what happens is that once a claim is made, these insurers had to be on the hook for the entire amount.
Right.
So what they've done is the pendulum swung to the other side, and there's a few reasons why it's difficult to get long-term care insurance today. And I don't know if we're going from first gear to fourth gear, but let me go with it.
Yeah.
Long-term care insurance has to be medically underwritten. You have to be approved for it. It's not automatic.
Oh, my God. No, it's not.
It is very difficult to get.
It takes about 9 months to get it underwritten from start to finish, at least. It's awful.
Well, unfortunately, it's quicker than that because they decline often on long-term care insurance applicants for pre-existing conditions.
Right.
They just are afraid of the business. They don't really want the business.
Yeah.
Number two, even if you could get the policy and be approved for it, the premiums are so sky high that it doesn't make economic sense to try to transfer a risk for paying that much money. And the third reason is that they've watered down the benefits so much because of those long stays in the nursing home that you can be in there and then the policy expires and then you're on your own.
Well, the elimination period could go out 6 months.
Well, the elimination period and then the benefit period might only be for a couple of years.
Yeah.
And if you're still in a nursing home,
you've defeated the whole purpose.
Yes, you're on private pay.
All right. So, and guys, I know you're asking me. I've got a few hundred local clients in Bluffton, Hilton Head. They're on Medicare supplements. The most common question I get, and I apologize to you folks that have asked me, what do we do? I have a solution now. I did it before because I don't sell anything I don't believe in. I don't sell long-term care policies anymore because I don't believe in them. I sold Genworth policies. Genworth policies over the last few years, I've got some angry calls from maybe 3 or 4 folks that I did sell those policies to, saying my premiums are going from $600 to $1,500 a month, and it's not sustainable. So what I brought Dan in to discuss are 2 things: alternative ways to fund long-term care. How can we transfer wealth from you to your children in the event that you do have to go to a nursing home? Dan, why don't you go from there?
Right. That's a great segue, Chris, because the purpose of the spirit behind long-term care insurance is to say, if this thing happens, I don't want it to devastate my life earnings and my wealth. So we need someone to pay that bill. So long-term care insurance concept is, if you go into a nursing home, we're going to pay the bill. For the reasons I gave you before, that's seemingly getting more and more difficult as a practical option.
Right.
So since we want to transfer wealth, here's an idea. Especially pay attention to the folks who are now having to have required minimum distributions from their IRAs.
Is that still 71?
It's this year was 73, and
73.
And we'll check it because it may have moved again. But the last,
But either way, like I'm just telling you, Michael, you're in Syracuse. I'm in Hilton Head, dude.
Yeah.
So the folks around here, they wouldn't mind. Anyway, go ahead. I'm sorry.
No, that's okay because they have to take money out anyway.
They got to take money out.
So here's an idea. Let's say that someone has a net worth of $2 million, split up between IRAs and some real estate. Primarily is the big thing. Instead of worrying and saying, geez, I'd really like to transfer wealth, but I'm not really too sure about if I'm even able or willing to put money into a trust. How do I do this? Well, if you could just take aside and say, here's a lump sum of money that I would like to guarantee that my beneficiaries, my children, my grandchildren will get someday, regardless if I go into a nursing home or not. For many of us, and once again, life insurance is also medically underwritten. But when you are looking at a life insurance, the actuarial statistics are much closer to accuracy than the long-term care situation was, meaning that the prices, the premiums on life insurance have come way down. Life expectancy has come up. Someday that it's going to pay. So the idea is,
and is that tax-free?
Yeah, life insurance benefits to beneficiaries are income tax-free, and if structured properly, also estate tax-free.
Nice.
Yeah, so it's a really good option to transfer wealth. The premiums are much less than otherwise what long-term care insurance would be. Not even in the same ballpark. You can get a couple $1 million, insure two people. That's how you do this. It's it's a survivorship policy, and for us out there who are single or widowed, you can also buy an insurance policy covers one life. It's the same thing. It's still cheaper than the other option, long-term care. So the idea is, if you ever have to go into a nursing home, you pay your way privately, and then upon your death, what'll happen is that your children, your beneficiaries, will get whatever's remaining in your estate that wasn't spent down for the care, but they'll always get this life insurance policy.
Quick question.
That policy could have been protected in a trust along the way. So you're guaranteeing that there's going to be some level of inheritance.
I don't mean to interrupt, but when they're doing that Medicaid spend out and they're throwing logs on the fire and they get to the life insurance policy, can't they throw that log on the fire and get the death benefit to pay for the long-term care? How is that so safe is what I'm asking.
Excellent question. And while we're not practicing law here today or providing legal advice, one way that our clients have done that is by placing the life insurance policy into a trust.
Okay.
Giving up ownership, relinquishing ownership over a number of years, 5 years we've all heard of for the look back period. But if that insurance policy is structured properly with ownership, then there's no.
That's not an issue.
It's not an issue.
Okay, so they can't take that.
Right.
Gotcha. All right, great. And so, folks, the other thing I want to talk about, I hope that you understand. Yes, the RMDs, required minimum distribution, has gone up to 73. But what a novel idea! I never thought about that. A lot of my clients that have Medicare supplements, they're living off the interest of 2, 3, 4 million, and they're living off the dividends. They're living off the muni bond, tax-free interest, and you have to take that money out anyway. And if you don't need it, what an incredible way to transfer wealth.
Yeah.
And you take those RMDs and you just funnel into a policy that the nursing home cannot throw onto the fire. Is that am I right?
You're exactly, that's the concept. Many of us who are in the required minimum distribution period of their life don't need the distributions. They call their broker. They say, well, what do I do with this money? I don't really need it. What do I do? You take that money and you see how much life insurance it can buy you. You pay the taxes on the on the IRA distribution, the net amount. You can design a life insurance policy that costs the same amount as your net required minimum distribution premium, or distribution amount.
I don't know what it is. I think car salespeople, and this is a buddy of mine who's now my Medicare supplement client said he's Southern, and he goes, Chris, I just want you to know that life insurance folks, man, you don't really have a good place in where we think about you. And I said, you know what? I wish I could introduce you to Dan Modi, because he uses life insurance as an instrument for wealth preservation. We're not kicking the tires trying to sell you a whole life policy.
No.
Where you look at the premium and the death benefit, and it's like layaway. You're buying life insurance on layaway. He is an estate planning. I don't want to say that, but I just want to say the reason why he's down here today is he's handling my wife's trust, and he's doing the things, he's generating income for. And I didn't realize when he threw the life insurance thing in there, how can I transfer wealth to my 4 children? And one of them's living with us now. How can I get, that's the most important thing that she wants. How do you do it? Life insurance. What kind of life insurance? You need to call Dan Modi. And so guys, below this video are a couple links. One of them is going to be a book appointment with Dan. I suggest if you have any questions about wealth transfer, long-term care, financial planning, please click that link, talk to him. He's not only a good friend, but he handles my family's affairs. So, Dan, anything else?
I want to tell our audience how much I love this part of the country.
He is freaking out right now because he lives in Syracuse. He's a golfer. Yeah. I don't golf, so like he always comes down. He's like, "Can you call some of your friends that golf?" And I need to start. I need to learn how to golf.
It's gorgeous.
But I took him to the May River. He's looking at the river. He's watching the dogs run around, and he's like, I got to be a part of this. So I'm moving down here as soon as I can. As soon as his kids are off and away in a year or two, expect Dan to be more localized. You'll see more of him. And for all you golfers out there, the night he comes down every 3 months to talk to some of the clients or his clients. But by all means, please give him a call and invite him to go to golf, because
I like talking on golf courses.
He does, and he does his best work on golf courses. Yeah. So guys, 843-227-6725, May River Medicare, Dan Modi. You guys have a great day. Bye-bye.
Thank you.